Have you noticed that most people run from any type of debt as if it were a great enemy? But the truth is that not all debt is bad. Robert Kiyosaki often says there's a very clear line separating debts that make you poor from those that make you grow. And understanding this difference can completely change the course of your financial life. Think with me. When someone takes out a loan to buy something that only generates expenses, like a new car that depreciates every day or an expensive phone that brings no return whatsoever, this is what we call bad debt. It takes money out of your pocket, increases your monthly obligations, and gives you nothing in return besides an asset that loses value over time. Now imagine using the same money borrowed from the bank to buy something that generates income for you, like a property that can be rented out, a small franchise, or even equipment that helps your business earn more. This is good debt. It's the type of debt that works in your favor, that puts money in your pocket every month. Kiyosaki explains that the rich aren't afraid of debts. They know how to use them as tools. They understand that the bank can be an ally if you know what you're doing. While most people take out loans to spend, the rich take them out to invest. The key is in the mindset. Before taking any credit, ask yourself, will this debt put money in my pocket or take it out? If the answer is put in, congratulations, you're thinking like an investor. But if it's take out, maybe it's time to rethink the move. After all, bad debt traps you, but good debt sets you free. And whoever learns to distinguish one from the other takes the first step toward building wealth intelligently. And before we continue, tell me something. Is this video making sense to you? If it is, like it down below. It really helps the channel grow and reach more people who also want to change their lives. And of course, subscribe to the channel so you don't miss the next videos, because what comes next can open your mind even more about how to use money intelligently. Here's one of the most powerful secrets that Robert Kiyosaki teaches, and that most people still haven't understood. The rich use other people's money to get richer. This concept even has a name in English: OPM, other people's money. That is, other people's money, and in this case, often the bank's money. Think of the bank not as an enemy, but as a strategic partner. It has the capital. You have the vision, the knowledge, and the plan. When these two things come together in the right way, the opportunity to create something great is born. But here's the secret. The bank is only a good partner if you know what you're doing with the money. Most people take out loans to spend and then complain about the interest. The rich, however, take out loans to invest and let the profit from the investments pay the interest. For example, instead of using your savings to open a small business, you can keep your money saved as a reserve and use the bank's credit to start. That way, the bank takes on part of the risk and you maintain financial security. Kiyosaki often says that whoever works for money will always be limited by their own time and effort. But whoever understands how to use the bank's money intelligently begins to make money work for them. The secret isn't to avoid credit, but rather to learn how to transform it into a growth tool. When you change this way of thinking, the bank stops being an obstacle and becomes a ladder to your success. Now that you've understood the difference between good and bad debt and discovered that you can use the bank's money in your favor, it's time to take the next step. Make your investments pay for their own debts. It sounds like magic, but it's pure financial strategy. Look, the problem isn't taking out a loan. The problem is using the money in a way that doesn't produce returns. When you use credit to buy something that generates income, the debt stops being a burden and transforms into an engine that drives your growth. Think of a simple example. Instead of taking out a loan to buy a new car that will depreciate, imagine using that same money to buy a small apartment and putting it up for rent. The monthly rent pays the loan installments, and in the end, the property is yours. In other words, the asset pays for itself, and you still build equity. This is the thinking of great investors, using credit to buy things that generate cash flow. It could be a property, a franchise, a small business, or even equipment that increases your company's profit. The idea is always the same. If the asset generates more money than the amount you pay the bank, you're on the right path. Robert Kiyosaki explains that the secret to financial freedom isn't working more. It's making your assets work for you. And when you reach the point where the investments themselves pay your debts, it's a sign that you're no longer just a consumer and are starting to act like a true investor. Remember, smart debts don't trap you, they free you. And every great financial empire began with someone who knew how to use credit the right way. This is one of the phrases most repeated by Robert Kiyosaki, and one of the most powerful. Don't work for money, make money work for you. But what does this really mean? Most people spend their entire lives chasing money. They work, receive their salary, pay bills, and the cycle repeats month after month. It's what Kiyosaki calls the rat race. But those who understand the money game do the opposite. They create mechanisms so that money works and produces income continuously, even when you're sleeping. And here's where the role of well-used loans comes in. When you take credit to invest in something that generates a return greater than the interest you'll pay, money starts moving in your favor. For example, if you take out a loan to open a small, profitable business, and the monthly profit from that business exceeds the value of the installments, it's the money that's working, not you. This is financial intelligence in action, transforming a cost, the interest, into a growth machine. It's the same principle used by great entrepreneurs and investors. They're not afraid to take credit because they understand how to transform it into a productive asset. But attention, the secret isn't just in having money, but in how you use it. Every dollar should have a function, generate more money. When money starts generating money, you achieve something few people have, freedom of time and choice. So, ask yourself, is my money working for me, or am I still working for it? The answer to this question can completely change your financial future. There's a huge difference between how an ordinary person and an investor present themselves before the bank. While most go to the manager asking for credit to pay bills or buy something that will lose value, those who think like the rich arrive with an investment plan, projections, and a clear vision of returns. And that's exactly why the bank prefers to lend to those with an investor mentality, not a consumer mentality. Robert Kiyosaki explains that the bank is an institution that lives on calculated risk. It doesn't just want to lend money, it wants to lend to those who know what they're doing. If you show that you understand the market, that you have a structured plan and a strategy for how that money will generate profit, the bank begins to see you as a business partner. And what's most interesting is that the more you prove you're a good money manager, the more doors open. Credit becomes more accessible, conditions improve, and opportunities multiply. It's the cycle of trust. The bank trusts those who demonstrate responsibility and financial vision. Therefore, think like an investor even before you have a lot of money. Put together a plan, know exactly how you'll apply every cent, and be prepared to show that. The difference between being denied or approved for a loan often lies only in how you present yourself, in the way you demonstrate that you're not taking money to spend, but rather to make it grow. The bank likes those who understand the money game, and those who think like the rich play this game with wisdom. Before seeking any loan or trying to use the bank's money to invest, there's a step that comes before everything: educating yourself financially. Without knowledge, credit becomes a trap. But with understanding, it transforms into a powerful growth tool. Robert Kiyosaki always repeats that money doesn't solve financial problems, education does. Because the problem isn't the lack of money, but rather not knowing what to do with it. Many people take out loans, believing that credit will solve their difficulties, but end up sinking even further by not understanding interest, terms, and cash flow. Those who understand the money game know exactly how to calculate risks, compare rates, and plan payments without compromising their peace of mind. It's like driving a powerful car. If you don't know how to use it, it can put you in danger. But if you master the driving, it can take you much further. True financial security isn't in avoiding risks, but in knowing how to manage them wisely. Therefore, study finances, read books, follow content that teaches about compound interest, assets and liabilities, and understand the time value of money. Each new piece of information gives you more power to make intelligent decisions. Financial education is the foundation that supports any wealth plan. Without it, money slips through your fingers. With it, every dollar that passes through your hand transforms into opportunity. And when you master this knowledge, credit stops being a threat and becomes a springboard to achieve financial freedom. Imagine for a moment that you wake up in the morning, prepare your coffee calmly, and meanwhile, money is entering your account without you needing to run out to work. This is true financial freedom, and it has a name: passive income. Robert Kiyosaki has always stated that the ultimate goal of any investor isn't to work more, but rather to make money work on its own. And, surprisingly to many, credit can be the starting point to achieve this, as long as it's used with intelligence and planning. But what is passive income? It's the type of income that keeps coming even when you're not actively working for it. It can come from renting a property, from stock dividends, from a business that operates with a team, or even from royalties from something you created. The secret is to build income sources that remain alive on their own. Now, here's the point that few understand. Credit can accelerate this process. For example, instead of waiting years to save enough money and buy a property outright, you can use a smart loan to acquire the asset now and start generating rental income immediately. While the tenant pays the rent, you use that amount to pay off the financing installments. Over time, the property is fully yours, and the income becomes 100% profit. This is using the bank's money as leverage to build passive income. It's not about getting into debt to spend, it's about using credit to create something that pays you every month. The rich do this all the time. They understand that credit is a multiplication tool, something that can shorten the path between where you are and financial freedom. But it's important to emphasize, this requires planning and knowledge. It's not simply taking borrowed money and investing in what seems promising. You need to do the math, study the return, understand the time frame, and have clarity about cash flow. Passive income isn't a stroke of luck. It's the result of conscious decision-making and financial intelligence. Kiyosaki often says that true wealth is measured by the time you can live without needing to work. And each source of passive income you create increases that time. Credit, used wisely, can be the fuel that drives this construction. Therefore, instead of running from the bank, learn to see it as a bridge. Use credit not to buy momentary pleasures, but to acquire assets that generate continuous income. This is the silent and intelligent path that transforms workers into investors and debtors into financially free people. The word debt usually causes discomfort in many people. It carries an enormous emotional weight because we were taught from an early age that getting into debt is something bad, dangerous, that should be avoided at all costs. But Robert Kiyosaki completely changes this view by teaching that debt, when used wisely, can be the force that drives your growth. Instead of being a burden, it can transform into a powerful lever. Think of a physical lever. With a little force applied at the right point, it's capable of moving something much larger than you could alone. Smart debt works the same way. It multiplies the power of your money. It allows you to reach goals that would take years to achieve only with your own capital. The big difference is in how you use debt. When you take out a loan to spend on consumer goods, you become a slave to debt. But when you use credit to acquire something that will generate returns, a property for rent, a profitable business, a machine that increases your production, you become the owner of the debt and it starts working in your favor. Imagine someone who takes out a loan to open a small, well-planned business. In the beginning, there's risk, of course, but over time, this business starts generating enough profit to pay the installments and still leave a surplus. At that moment, the debt stopped being a burden and became an expansion tool. That's exactly how big companies and investors grow. They don't wait to accumulate large fortunes to start. They use credit strategically. They know the secret is in controlling cash flow and ensuring that the return on investment is greater than the cost of financing. Kiyosaki himself explains that the fear of debt comes from lack of financial education. When you understand interest, terms, and profitability, you realize that debt isn't the enemy. The enemy is the wrong use of it. And this is where the mindset of the rich comes in. They don't ask, how much will I pay? But rather, how much will this earn me? Transforming debt into leverage is, above all, changing the way of thinking. It's stopping seeing credit as a problem and starting to see it as an instrument for building wealth. Because in the end, borrowed money can trap you or propel you. It all depends on who's holding the lever. One of the biggest differences between those who remain in the rat race and those who manage to build wealth is in the mindset about money and debts. While the average employee sees debt as a scary risk and avoids any credit, the entrepreneur sees debt as a powerful tool for growth. Robert Kiyosaki always emphasizes that mindset makes all the difference. Employees work for salary. They sell their time in exchange for money and feel afraid to get into debt because they associate any loan with loss. Entrepreneurs and investors, however, think completely differently. They see credit as a lever that can be used to generate more money, multiply resources, and create long-term opportunities. For example, a typical employee might save money for years to buy a property outright. The entrepreneur, however, can use a well-planned loan to acquire the same property now, put it up for rent, and start generating income immediately. While the employee is still saving money, the entrepreneur is already building equity and cash flow. Thinking like an entrepreneur also means making strategic decisions. It's knowing how to calculate risks, predict returns, and invest intelligently. It's not about spending more, but about using resources in a way that works in your favor. The difference is that the entrepreneur transforms obligations into opportunities and costs into investments. Kiyosaki explains that this mindset shift is one of the most important steps to achieving financial freedom. Because while most fear debt, the rich control it. While many see only problems, investors see possibilities. And it's exactly this vision that allows creating consistent and sustainable wealth. To build real wealth, you need to stop thinking like an employee and start acting like an entrepreneur. Change the way you view money, debt, and credit. When you adopt this mindset, money stops being a daily worry and becomes a tool for growth and freedom. If we've come this far, you've already realized that wealth isn't just about how much money comes into your pocket, but about how you make that money grow. Robert Kiyosaki teaches that the true secret of wealth is in knowing how to multiply the resources you have available, whether they're money, knowledge, or opportunities. Think of money as a seed. Alone, it does nothing. But if you plant it in the right soil, water it, care for it, and have patience, it can transform into a lush tree, bearing fruit for years. A well-used bank loan is like that fertile soil. It offers growth potential, but what really determines success is your knowledge, discipline, and strategy. The rich don't accumulate money by luck. They learn to identify opportunities, leverage resources, and reinvest profits intelligently. Each loan, each investment, each calculated decision functions as a multiplier of wealth. And the more you understand how money works, the greater your power to create wealth sustainably. The crucial point is that wealth isn't about spending, but about making each resource work in your favor. If you can transform debt into leverage, credit into cash flow, and time into learning, you're on the right path to financial freedom. And here's the final message. Wealth isn't a destination, but a journey of conscious and intelligent choices. Each step you take to understand money, master credit, and invest wisely brings you closer to living with security, freedom, and independence. Remember, money is a tool, but who decides how it will grow is you. Use knowledge, discipline, and strategy. Multiply your resources. And above all, don't be afraid to use opportunities in your favor, because true wealth is in transforming each decision into real and sustainable growth. If this content helped you see money differently and understand how to transform debts into opportunities, share this video with someone who needs to change their financial life. And don't forget, subscribe to the channel and activate notifications to receive new tips and strategies on how to build wealth, use credit intelligently, and change your financial life for good. Remember, each step you take toward financial knowledge is one more step toward the freedom and security you deserve.